Welcome to our midday market update. We couldn't do a morning one for you. We had some technical difficulties. I was still having technical difficulties at the beginning, so I'm gonna have to cut that part out. But welcome aboard. So because we couldn't do a morning one, I'm gonna flip the screen share on and take you through a little bit of analysis and give you some little bonus stuff. We just wrapped up our trading room. We did really good. Marky's green today, right, Marky? Victorio's hiding out of the picture, but he's green too. So we've had three of us went green today. So that's 3 green days. That's how we record it in the journal. No, I'm just kidding. In today's markets, we saw some strength in the European session, but weakness in Asia. And then we had some weakness early on in the US future session, but that quickly reversed. And I'll show it to you in a moment. One of the key drivers of today's market, some of the fears around today's markets, was this 10-year Treasury note going above 3%. And in fact, even went above 3.1%. And that's a little bit of a bearish occurrence that traders were eyeing. And early on, we had a bearish move through the overnight low, and we quickly reversed higher, and we were able to get some bullish opportunities out of it. So let me just screen share with you, and I want to show you guys and ladies that are watching, I want to show you some of the opportunities today. I'll review our own session as well that we had, and I'll take you through a few levels that you can watch for the afternoon. So I'll give you a little bit extra because I wasn't able to do the morning market update. All right, so let me go screen share. Just turn the camera off very briefly here. I will share my screen with you. Just let me choose the right one. So you guys should be able to see the screen now. Here's what we were looking at. So early on today in today's market, and the last couple of days especially on this bullish move, this is the S&P 500. Around this 2600, we tried to break this in early February. We couldn't. We tried to break that level again, the 2580, and hold below 2600 in early April. We couldn't. The last move down in May, the third month in a row that we've been trying to break these lows, we jump in and this candle fades right back up. This is called a hammer. And this hammer puts in a low usually. So the second we saw that hammer opportunity on increasing volume, we knew that we're going to chase out some of these short sellers. Short sellers here, here, and here are puking. What does puking mean? How does a short get out of a position? They have to buy to close their short position out. So short sellers trapped at the lows are actually buyers waiting to happen. They're buy orders, buying liquidity, waiting to be triggered. That's what we got. We got buy stops up through that level. And now you'll notice on the upside, though, the volume is waning off a little bit. It's dropping a little bit. If we get above these 40s, next target is 2780 on the S&P 500. All right, that's the level that we're kind of eyeing. But first, we're going to need to get some more volume coming out because now that the shorts are pretty much squeezed out, there's more stops waiting above, but the nervous shorts are squeezed out. We may dip and try to find some real money that's trying to buy. We need to get some long money now to take us to the next phase. The short covering rally is over, and now above this top of the 40s, we need to find some real buyers that are going to take us to the next level of 2800, even 2780. All right, so that's kind of a higher term overview of the market. The US dollar today continues to bid. It's hanging around near 2018 highs. So this strong US dollar has been leading to gold weakness at the bottom right. You can see this is the gold, and it's sliding at the same, I mean, they're not the same time frame. Now they are. You could see that US dollar rallying has put the sell pressure into gold, along with seasonality. There's a lot of reasons that gold's been short. Bonds just broke a low as well. So as these yields continue to climb higher, bond prices are moving lower. That's to be expected. I guess the one market that is surprisingly higher on the back of the strong dollar is oil. It just took out the 72 marker. Brent crude took out the 80 marker out of the UK. So we're hitting above some key resistances, but we're running out of volume on these rallies as well. So if this dollar continues to rally, I think oil is going to start to see some weakness at some point in the near future. This rally may have come to its top end. And I mean, we're not going to be short for 10 years, but a fade opportunity is here. And then the next longs maybe around the 70 area and 68 ultimately as well for continuation to the upside. All right, that's a little bit of a longer term outlook. I'll show you guys our trades for the day today and what we did. I'll walk you through some of that analysis. And if you guys have any questions, pop them in there. I think you could ask questions on YouTube. I know you can. So just ask them and I'll check them for you. Okay, so news today. We didn't really have many big news. We had we had the weekly jobless claims. They were a little bit higher than expected. They came out at 222,000. All right, so slightly higher than before, but the 4-week average dropped off. and therefore it was sort of a mixed report. It wasn't as bearish as it would have been on the headline number. So be careful, you're not just looking at headlines, you're looking at more advanced and deeper data and analytics. You almost got to be like Cambridge Analytica, just really get in there. All right, one other thing I'll show you, everybody has been asking, this 10-year yield, how do we follow it? The answer is you don't. No, I'm kidding, you do. So you go in here, and the symbol on TradingView is US1010Y. This is the US 10-year yield. You could see how this yield is continuing to drive higher. Look at it just break out now. All right, and as this yield goes up, the United States government borrowing costs are going to increase. That's going to put pressure on the budget. It's going to make borrowing costs increase across the board, and as the yields go up, bonds are going to drop. This 10-year yield is the talk of the town right now, and every proprietary trading company and every institutional desk around the world, I guarantee you they're watching this chart right now as we speak. So that's a powerful one. So you can just plop that onto your trading view, keep tabs with it. Wow, it's really breaking out. Are equities dropping, Vic? Yeah, there you go. So I'm pretty sure equities are getting pumped right now. There you go. Look, they're dropping. Equities are dropping because that yield's going up. So here's the S&P 500 this morning in our trading room, and I'm going to feature some quick little snippets of it from our trading room, and I'll make it available to you guys on YouTube for today's trade because we did really well. And I'm going to add the positions so I can show you guys the trades. And here's how I traded them today on the S&P 500. So early on, we noticed that there's a key support down here. Overnight low was at 27.15 on the futures. And initially, I got a long trade that paid off pretty quickly. Or sorry, a short that paid off quickly. But then I got long on the open thinking, hey, this thing's going to rally higher. And I got stopped out. All right. And then what we did is shorted. We got paid very quickly on that move. And then we started to buy them up here. You can see the longs getting paid on the way up, adding positions on dips, getting paid on the way up. And I think one of the learning lessons here for you guys is it's not what the market does, it's what you do based on that information that gives you the paycheck. The fact the market's up doesn't mean that you automatically have a profit. You got to earn the right to have that profit no matter what the market does. Next support level we have charted out here is 26 even to about 25. That's the overnight high level, 25 quarter, and the current support levels right in these 26, 25s. Pullbacks down to here could be buyable. It's going to catch up with the VWAP, the overnight high, nice block of volume there, previous high, nice buy delta as well, and a cluster of buying balances. Lots of reasons to like these 25 to 26s for a long on the S&P 500. All right, so that's that. Another thing I wanted to show you is the price of gold right here. Here are the gold prices. Let me make this a bigger chart. We've had a support level down here in gold at 1288.90, and I think that could temporarily hold. Another key support here on gold is right around this level. That's going to be a big support, 86 to 87. And I think resistance right now, I mean, you're getting these highs that are lower. You're getting lower highs, but you're not getting lower lows. So this is triangular-like action. If the US dollar continues to rally, look for more downside pressure on gold. You got to sell rallies. Every time it pops, sell it. Pop, sell it. And if it takes out the low, continue with that momentum. If the dollar keels over and starts a pullback, then you got to start buying gold on the dips and look for buy stops to come out. There's a lot of shorts here. In fact, in the gold contracts at 1288.20, you have a total of 1,200 short contracts. One tick below, another 700. So that's 2,000, 2,500 contracts short at these 88.20s. Wherever there's a big cluster of open shorts below, that's a great support because these shorts will start buying for break even. And as we go up, the shorts down here get even more nervous, start buying at market, and it fuels the rally. Top end resistance on gold is 1295, right? Supports 1287, and you can look to sell rallies until the dollar starts to roll over bearish, then look to buy dips and ride this thing up to a buy stop run. All right, guys, that's what I got for you today. This afternoon on the economic calendar, you really don't have much on the economic calendar. Let me just confirm that. Let me have a look at my trading portal here. So this is called Trade the News. I'll let you guys have a sneak peek of Trade the News. This is a subscription service, about $185 a month. We have a special rate for our subscribers. May 17th. You can see it lists a lot more than any other news website, and it's a live audio squawk, so it tells you in real time what's happening. At 11:30, you have Justin Trudeau speaking, Prime Minister of Canada, and at 1 p.m. you have U.S. Fed's Kaplan. He speaks before the Richardson Chamber of Commerce in Texas. You got a couple conferences, but really nothing else. After market, you got some of these names reporting earnings. And for the most part right now, Fed's Kashkari speaking, and he says lack of affordable housing shows that something is broken. Comments out of Minnesota. And the FTC chairman is looking at a heavy focus on Equifax data breach investigation. So that's actually interesting because if you look at EFX, that's the symbol for Equifax, the stock symbol. So if we go up there and pull up a chart, maybe there's a short opportunity. An investigation intensifying against a company from the SEC is going to provide it some selling opportunities. You see momentum here hasn't really kept up. It's a little bit bearish. Equifax could be a nice short around 117 to 119. Not stock short, but right there, that level, if we pop up to it, you could do some option spreads on the put side, be it a debit, right? Some call credits, whatever you want, something that is going to benefit as volatility drops and delta increases to the downside. All right, 118 is a good resistance. Keep an eye out on Equifax. It's going up on low volume. Momentum starting to turn a little bit. 118 has the 100 and 200-day moving averages. All right. If you guys enjoyed this extended midday market update, please give me a thumbs up on YouTube. If you like the video, that's what the like button is for on YouTube. Believe it or not. It's true. Help us out because help us help you, because the more engagement we get out of our YouTube video, the more views and traffic that we get, and the better updates that we can do for you. Heck, even a thumbs down is awesome. I'll take that too. All right, you guys have yourselves a great day. Thank you for tuning in. We'll be back in our regular time slot, 9 a.m. tomorrow. We just had technical difficulties with YouTube in the morning. It just wasn't loaded. You guys rock. Have yourselves a great day. Stay on the long side. Look for a pullback here on equities to our key support around 25, 26 on the SPOOs. And that should be a nice support level to rally out of for the remainder of the day. We're bullish. Volume's flowing on the upside. Bids are increasing. Offers are getting pulled. Stick with the long for today until early afternoon, and then we can get a bit of a fade longer term. You guys take care. Have a great day. Thanks for tuning in. Manage your risk. Trade like a trade pro. And I will see you guys tomorrow morning at 9 a.m. Be there. Vic, say bye. You're on the cam again. Marky's right there. Hey, Marky. All right, guys, that's us. We're going to go keep working for you. Market's still active, so let's go in and make a little bit more. See you later. All the best. Have a great day. And enjoy the rest of your days. Take care, guys. Bye.